Welcome to episode 4 of the Funded Trader Mastery series. Episodes 1 to 3 was more about going back in time, going into the belief systems, going into the mindset, the frame of mind. Everything is more so psychological. It's important that we go back to that firstly before we then push forward into technicals. But now we've reached episode 4, we're going to move into the next stage, which is technicals, and we're going to start to bring into the effect daily bias. I promise you, this will be the only daily bias video you ever need. This will simplify it into means where it's so easily applicable on the charts. It's so easy to identify if you follow this simple framework. Okay, we have people inside Envision that are doing very well on the back of this, getting their best months to date, getting funding, getting payouts. You just need to copy, apply, and practice. So, without further ado, let's get into the charts. Kicking things off the charts, I'm going to keep things as simple as possible. Okay, so 3-step process. We bring in daily bias, then into H1 order flow alignment, then into daily cycle power of 3. Okay, these are going to come into the equation very nicely, and you'll see how the jigsaw fits together. The daily time frame. The daily bias is where things kickstart. Do I use the weekly, the monthly? Of course I do, but if you want to keep things as black and white as possible, this is how you do it. 3 time frames. Daily, 1 hour, 5 minute. We go from there. Right, when you view a chart, ask yourself what the first thing you view or what comes to mind, okay? The way we view and determine daily bias comes into the form of a couple of questions. Number 1, market structure. Are we bullish or bearish? Okay, let's just tidy this up a little bit. Market structure. Are we bullish or bearish? In other words, are we making higher highs, higher lows, or lower lows, lower highs? Second, where's the DOL, the draw on liquidity? That supports market structure. And then third, have we tapped into a PD array, OB, fair value gap, liquidity sweep? This is what you want to come down to. Daily bias. First question, if we were to look at this chart, what would we look at? Is the market moving in a bullish trend or a bearish trend? Market structure is bullish. How do we know that? We've got a clear higher high, then price comes down into a higher low, doesn't take out any significant swing point to the left. We then form a new higher high. Order flow at this point is bullish. Therefore, we're going to look for the draw on liquidity that supports price. So whenever we then get the pullback, remember, when we break a structural point like this, we're then obviously waiting for that pullback to take place. This is where PD arrays come into the aspect of things, okay? So PD array can be an OB, fair value gap, or a liquidity sweep. Now inside Envision, we look at 2 different OBs, which hold a lot of reliability. The first one, decisional OB. The OB that causes the break of structure. This holds a lot of volume because it's the move that initiates the break in this structural point. Okay, so when we come back to this, we're going to at least expect some form of reaction. Second, the extreme. This is at the origin of the price leg from this low to this high. Or in a sell model, this high to this low. That's what we really need to focus on, okay? That's everything. Market structure, bullish or bearish, bullish. Draw on liquidity, where's the draw on liquidity that's going to support price? In this example, if we have a bullish trend and we're forming higher highs, higher lows, higher highs, if we come back and potentially form a higher low, where's that first draw on liquidity? The swing point, the draw on liquidity that supports price. So we are looking at this point as a gravitational pull of where price will deliver to. This is what's known as a weak high. And the truth of the matter is, when you can align all these timeframes and you can hold a certain conviction on this playing out, this leg here becomes a lot easier. You're almost like a horse with blinkers on. You don't think about too many sells, you're not trying to ping pong the market, you're removing 99% of that confusion and you're focused on buys. Any pullback in this leg becomes a valuable opportunity to get involved in longs. Okay, this is how the timeframes align. So daily bias, that's what we come back to. This is where the H1 comes into the effect. So what do? Come back to the same questions. Market structure. Are we bullish or bearish? Well, if we're reading price, we can see that originally we was bearish, forming lower lows, lower highs, and lower lows. Then what we had is a shift in market structure with price delivery to the upside, meaning that we are now potentially changing to bullish. You back that with intention in the move. This is a very good conviction point to be looking for buys. Then we form higher high. Now remember, in this leg itself, we do not have a confirmed order flow change until we get higher high, higher low, higher high. However, as soon as we form this higher high with pullbacks, I'm still happy to play off the back of that. Because the truth of the matter is, if this high is backed with an intentional shift in market structure, this tells me the signature of price. This tells me everything I need to know about where price is likely to move. Okay, then same thing. Where's the drawn liquidity that supports price? The swing high, because we are bullish. PD array, last thing. What do we come back to? Two OBs. Decisional, extreme, and there's one final thing I want to add in. Decisional, if price pushes back into this range, if we just zoom right in, if we pull back into the range, the OB that causes the break in structure, in this case the shift in market structure, this is a very good point for price to turn around. So I will happily take longs off the back of that as long as it's supported by time and price. Then we have the extreme, which is where? At the origin of this price leg from this low to this high. Okay? But there's one final area we also need to mark out, because the truth of the matter is price doesn't always need to pull back into that decisional. So our backup plan is a sell side liquidity sweep, which could be in the form of a previous session low, a previous daily low, usually in those forms because we're looking at a H1 time frame. Okay, any sweeps that's backed by that time and price entry model will look into shape up that long. Okay, so this is order flow alignment. Keep it very simple. The truth of the matter is, when price is delivering higher highs, higher lows, am I looking for shorts? No, I'm not. Why? Put your blinkers on, focus on the path of least resistance. Order flow is bullish, recognize that and play it. Your trading will become so simple as long as you stick to this. Pro trend is magic as long as you understand how to play it. And I'm going to show you some live examples soon. 2 trades I'm actually running in on swing positions because I understand this and I've mastered this. Okay, so that's that. Then what we come down to is the daily cycle power of 3, which of course is an ICT principle. We've come back to the M5 time frame in this case. Now, in order to understand the power of 3, you've got to look at how a daily candle forms. On a bullish day, we have the opening price. The opening price is where the new daily candle starts to open, which is 10 p.m. GMT. Okay? Here. Opening price. Usually what you'll find is Asia session, which is the yellow box here, is the accumulation phase. This is where price will engineer liquidity ahead of the purpose for Frankfurt and London to come in and manipulate price to the upside or downside. Now, the question I want to ask yourself is this. If the daily bias is bullish, H1 alignment is bullish, what are we looking for from a lower time frame entry model standpoint? Bullish pricing. We want price to support that. So if we've got accumulation forming in Asia session then gets ran in London, forming the manipulation and very likely the low of the day. Then what we're looking for is this entry in here plus New York for potential entries. We're talking here, maybe even potentially here. On the way up, we're riding price, okay? But we're not trying to call the lows. We're waiting for a specific entry model here with shifts in market structure to determine price that's in a buy program to a move then to the upside, okay? So we tend to form accumulation, manipulation, distribution. New York will often act as a continuation of London and sometimes a reversal. Now, once price takes one side of London out, there's a 70% chance that we're only going to take one side of London. So if we take London highs coming into New York, there's a 70% chance that we are going to hold London lows. So this acts as a continuation into higher prices. And then what we often get is London close, which forms high of the day, and then we typically start to see some form of a sell-off. With this sell-off, especially on certain pairs like GJ, you can provide some very valuable trades itself. Is it lower volume? On some pairs, yes. On GJ, I still find it produces very clear results, but on something like EU or dollar Swiss, a little bit less so. But this is the daily cycle playing out. Your job is to get involved in the move as early as possible, ideally in the daily wick of the candle, okay? Or as close to it as possible. Even if we're talking here, you're still involved in that move. And the truth of the matter is, if this is on a pair like EU, this daily range could be 80 pips, right? Let's just remove that. Let's call that range 80 pips. Then on GJ, that could be 150 pips, depending on the day. So it completely depends on that. So if we are looking to get involved in this wick, you're getting involved in the bottom 30 pips, pretty much, okay? That's the goal for us. Because how the daily candle forms is we've got that open, we will drop down with the manipulation prior to forming the low of the day. Our job is to play off the back of that manipulation, okay? So how we interlink with these is the following. Keep it as simple as possible. When you see a blank chart, daily bias, market structure, is it bullish or bearish? Dull. Do we have a drawn liquidity that supports price? Usually there'll be not only one, but two, or even three. In this case, we got two. Okay, then what you're looking for is the H1 alignment. Sometimes there will be a disconnect, so H1 will often lag behind. If we're in that PD area on daily, price could sometimes be here, but as soon as we start to see that buyback in market structure, that aggression, you already can anticipate that we're going to shift market structure. So sometimes we can lag behind on the 1 hour, but then following that is usually higher high, higher low, higher high. Our job then is to then play off the back of this. Keep it as simple as possible, okay? Inside Envision, we also talk about substructure as well, so it means that essentially, once we've got that potential higher low form, call it here, although we don't know for certain, there's certain characteristics in price that do take effect. So this leg here is very important to us because this H1 range could be 200 pips, right? So it means that although we're looking for this trade here, this original trade, there may be a pullback in here to get long. There may be another pullback in price here to then get long. Usually price, before it breaks structure, will pause to tempt early sellers into the move, and then we'll ride prices higher. So these particular trades here are some of my favorite trades. I love them, okay? They're so easy to play. So that's what we cover inside Envision quite a lot. That's H1 alignment. And of course, last but not least, power of three in the form of a daily cycle. There are other daily cycles at play as well. There's a daily cycle 1, which is this. Daily cycle 2 typically happens on pound yen or the related pairs, and it's when Asia doesn't get taken. Asia will form the higher low of the day, but it's based on, usually because it's a yen pair, the expansion will take place in Asia. So it typically can take place on that, or even on a USD pair, when we're in a very impulsive market environment, price doesn't always pull back. So it's important to understand how to play that, which I cover inside Envision Mastery. But for the most part, this will happen 60% of the time. This is the theory. Now let's take a look at some live price and I'll show you some examples. Here we can take a look at pound yen. And to use pound yen, I usually bring out JPY basket as inverse correlation, and then we also use things like euro yen. So if we start on the daily, same picture, same model, okay? Now, slightly trickier pair to start things off, and then we're gonna cover euro dollar, but let's take a look, okay? Daily bias, are we bullish or bearish? That's what you wanna ask. Well, it comes down to market structure. If we form, as we can see here, higher high, higher low, higher high. Anytime price grabs liquidity like this with a wick, as you can see, does this close with a body close above? No, it doesn't. Therefore, this does not count as higher high, higher low. It's also internal structure, not external. So we've got higher high, price comes down, and you can see this big flush in price. Now, this big flush in price will put a lot of people off, because you'd see this, take out the swing point and say, we're clearly shifting to the downside here. There's a lot of bearish pressure. Truth of the matter is, you've got to ask yourself, how do we break? Okay? It's not a black and white approach of we've broken, it's how do we break? And in order for price to determine how we've broken, you sometimes have to let price play out. So here, this was NFP, clear impulsive move to the downside. Takes out this low with a wick. The next day, which was Tuesday, we then start to move higher, resulting in higher prices. So we start to the beginning stages of that retrace. So at this stage, we can look at this and say, well, we've broken with a lack of intent, which for us means more upside, not more downside. Okay? So daily bias is still bullish. Higher high, higher low, higher high. Now we have, where's the draw on liquidity to support price? The high. If we've liquidated sell side, our target is then buy side, and we have two. One being the swing point, next being this intermediate point as well. We can look at both. Okay, that's the daily. So we're very much aligned. In terms of PDRA, we've swept liquidity and we've also tapped into this OB. Okay, so we're aligned to the upside. H1 order flow, all we need then is for price to align. Now, we knew this ahead of time. We were looking at prices inside Envision to move higher. Reason being, we've come into a new week open here, formed potentially a very obvious low that could be the low of the week. So I'm happy to play off the back of that. Then what we have is look at where price pauses right before the break. Notice what I said before. You've got to ask yourself why. Okay, so we form a higher high here. Now, because of this corrective price action, I'm looking for a pullback in price, usually some form of a flush down on GJ. Then we had that flush down, which was here, and that's when I'm looking for longs. Okay, we tap into that OB, it aligns with time and price. This was a trade that I called on a live trading session inside Envision, and there was a lot of people take it inside the group. Okay, we then push higher, forming higher low, high high, higher low, higher high. What did we then get? We'll visit lower time frames soon. Price deliver higher high, comes down, liquidates, sell side. Pushes up, pauses before the break. I'm obviously looking to get involved in that. I take the trade, and we're currently running very nicely at 3% on the scaling and 5.4 on the original position with targets of 6.9, 8.4, okay? Very big position. Overall, this is why we're looking for longs. Then on the lower time frames, what do we have? If we just go down, now this was daily cycle number 2, a little bit more advanced. Here you can see flush down. Remember the daily cycle we covered before? Asia lows gets taken. Now coming into the day, because the opening price was here, we rallied higher, there is a chance that this is the high of the day. There is that chance because we expand lower. But when we do expand lower, we flush down, we tap into this OB, and then we create that very obvious push to the upside. Okay? Now when we push to the upside, we can check out this. Let's just hide this for now. We can see London session opens, breaks the low. We then have a shift in market structure. There was also SMT on here as well. This had everything in the mix to then take off. Okay, we form this little pause in price. We then get the next impulse. A characteristic of GJ is that we don't often pull back. So I'm not waiting for a pullback into these sort of areas because it's unlikely on GJ with this momentum backing it up. Okay, so I'm looking to get involved. I get involved. Over the next hour or two, we rally extremely higher, almost coming to the point of breaking Asia highs. Then 12 p.m., we have the GBP news. Notice how this move is already priced in ahead of news. I'm entered, I've got risk-free, I've got profit locked in, I'm good to go ahead of news. Okay, that just then provides the volume and then we take the trade. And then vice versa on the next day, as I said, slightly more complex daily cycle, but we have Asia form the low of the day. This was anticipated. We then get a decisional OB that causes intent, nice engineering of liquidity below, and then as soon as we pop in before London open, I then take that trade. Safe stops below, slightly stops clipped. Okay, and then we're riding prices higher with the same sort of model. So this is coming into the equation that this is so simple. Is it easy? No, it takes some time, okay? Now, if we just take a look at an easier example, this would be in the form of EU. EU is very clear, okay? Start off on the daily. Let's like speed run through this because this should be a lot clearer in your mind. There should be light bulb moments going off, okay? Daily bias, bullish or bearish? Bullish, why? Higher high, higher low, higher high. Price pulls back, where? Oh, isn't that interesting? Decisional OB that causes the break. Lot of volume in here. This is a reaccumulation. We also sweep sell side. We do it impulsively, but look how price retraces 2 days later. So daily bias, bullish. And then everything this in here, any pullback becomes of significant value to look to target the 2 draws on liquidity above, okay? So 2 out of 3. PD array, last thing, tapped into this daily OB, and swept sell side. So that's the daily bias, bullish, right? We've done that in what, a minute? H1 order flow. Was bearish, lower low, lower high, lower low, internal shift and external. Higher high, higher low, higher high. What are we then looking for? Pullbacks into 2 areas plus sell side. So first scenario is price takes out sell side, provides the entry, and then goes. Would I take that? Yes, I would. As long as it's backed by time and price, and by time and price, I mean London open kill zone, New York kill zone, or London close. If it's within London overlap between London and New York, that tends to be engineering of liquidity. I'm not getting involved. Reason being, my time is valuable elsewhere. Do I want to waste my time in the markets when price is being slow? No, I don't. Mastery is showing up to the markets in those high volume windows. Outside of that, not interested. So sell side sweep, that's my point of reference for buys. Next point of call, decisional OB, which is the range that causes the break. And last but not least, we have the extreme OB, which is the origin of that move. Any one of those areas, I'm happy to take longs out of. Notice how, inside Envision, we are focused on current structure. This is what makes trading super easy. I'm not focused on what happened in 1989 or 3 weeks ago. It doesn't really make that much difference to me. Am I considering to the left? For sure. If there's a big range at the top of structure, we're likely going to get a reaction out of that, even in current structure. But the most important structure is current structure. That's all we need to master. And then on the back of that, you have the lower time frame execution to then back that up. Simple. Okay, so we come back to the fundamentals, 3-step process, daily bias, H1 order flow alignment, and last but not least, daily cycle power 3. If you can spend the time and invest the time into this video, put it into practice, and an exercise for you is the following. On the back of this video, what I want you to do is go on a pair of your choice. Could be Eurodollar, could be NASDAQ, could be gold. Do the same process. Take screenshots of the daily, the 1 hour, the lower time frames, and do 5 examples. That pattern recognition will be so helpful in understanding this concept and being able to apply it. Hopefully that helps. I would assume that's going to offer a lot of value for you. It should be a light bulb moment to simplifying daily bias and market structure. Overall, hope you've enjoyed that. See you in the next one.